we are here together to discuss today about how the assist-based tokenization is disrupting the financial industry. I have an amazing set of panelists here, and I will do a very short intro. Basically, it's Daniel here with us from Tokeny, it's Olivier from Charles Russell Speechlys, and it's also Stefan from Aulus. We are also waiting from Sam from Bloccelerate to join the panel today. So I would like to invite you guys to do a short presentation of what on how you are involved into the assist tokenization, and after we'll continue with the set of questions. So please, Daniel, if you can get a short.
Sure. Thank you very much for having us today on this webinar. So my name is Daniel Coheur. I'm in charge of sales and business development for Tokeny. I'm one of the co-founders as well. So Tokeny is a company based in Luxembourg. We're a team of slightly above 30 people, 3 years old. Since June last year, we have Euronext, so the largest stock exchange in Europe, as a shareholder. So the vision of Tokeny is that digital securities will be the norm in the numbers of years, obviously shorter term than longer term. And we have developed tools and solutions in order to enable the digital representation of financial assets on the blockchain, on distributed ledger technology. And we have developed tools and services in order to manage the issuance, the servicing, and the transfer of security tokens on the blockchain. Since we started our business, we have onboarded more than 50 customers. We started with a utility token at that time. This is what was the hype, but very quickly we moved to a security token, and we have developed a unique solution called the TRX, which enabled to bring compliance on public Ethereum. So we have developed since then a suite of services along the TRX in order to guarantee that this compliance is respected from the issuance to the redemption of those securities. Obviously, being part of the Euronext group, we're also working on secondary trading solution, because having a token can certainly bring some benefit in terms of issuance, cost optimization, etc. But obviously, for private market instruments, the real end game is obviously to create some form of liquidity for those instruments, and this is what we're working on.
Thank you. Olivier, please. The microphone is
sure. So hi, I'm Olivier Cavadini, partner at Charles Russell Speechlys in the financial services department. Very shortly, in terms of project and past experience, we also started with the utility token, as I guess everybody did. The main one, or the first one, was Kunde in Romania, so a Romanian-based project, but it was issued from Switzerland. We are also involved with a real estate tokenization project, but we are still trying to figure out the way to address the legal issues related to the foreign acquisition, or the acquisition of real estate by foreigners, which also is applicable in this type of project. So we have quite a lot of questions to address. Maybe I will leave it to Stefan also to present himself.
Please, Stefan.
Sure. Hi. Thanks for having me. I'm one of the co-founders of Under Development Office. This is a software agency that's based here in Bucharest, and we've been active in the blockchain space since before all of the ICOs that you can think of. One of the projects that I personally built myself together with this company is called Auras, which is a cryptocurrency that's backed by physical gold and coupled with a cryptocurrency that shares revenue from that. From the gold-backed cryptocurrency. We set it out initially from the very beginning to be a security token. This was not something we avoided, which was difficult for us, of course, from a legal standpoint from the beginning, but now the project is launched. It resides in the UK. I think we've got, between $5 and $10 million of gold assets under management and trading on a couple of exchanges.
Excellent. Thank you, Stefan. So what I think would be very interesting, because our audience are our current audience are people who hear for the first time about STOs, and are also people which are involved in this type of projects. So what would be very nice to make only a short intro on what type of assets can be tokenized and which are the main benefits for doing this. So Daniel, I don't know, please.
Yeah, sure. Well, first, I would like to say that a digital representation, token digital representation of a financial asset is not something new. Assets are already dematerialized. What we're talking here is about dematerializing those assets, not on the mainframe, which is managed by a bank, but to represent it on the distributed ledger technology, which is the blockchain, right? So, of course, very often people ask me what type of asset can be tokenized, but any assets actually. There was, of course, a big debate, and that's why we have this question with regards to utility, our utility token being securities. But at the end of the day, if you deal with the security, obviously you just have to respect the rules associated with those financial instruments. And of course, certain rules are more complicated to maintain on the blockchain. So if, for instance, you need to have a custodian or a transfer agent, those financial institutions are not necessarily in the capacity to custody those digital assets, but you can certainly issue any financial instruments and have that represented on the blockchain. Now, in certain countries, of course, the blockchain is not acknowledged as a suitable infrastructure for holding those security. And that's why we have regulation evolving. And where you had regulation that was, let's say, more technology agnostic, such in Luxembourg and Switzerland, there was no need to change the regulation. It just gave a definition of those assets and why obviously blockchain was a suitable infrastructure. But in essence, any financial security could be represented on the blockchain. If the law is not allowing for that, obviously then you can give a different legal representation of that asset. So you may say that indeed in the country where you don't have a specific law, then the token is merely a representation, a mirror of the financial asset, and the main registry of that asset is what will serve as a legal proof of ownership. But in those countries where the blockchain is recognized, you can have then the token represented on the blockchain, and then the blockchain can be used as the main registry to extract the information on the shareholders. So it's just a legal definition that you give to the token, and you compare that to the instrument that you want to issue. As long as you respect the rules associated with that instrument, private, public, limited distribution, country of exclusion, eligibility criteria, then you are fine to issue a token.
Excellent, thank you. For the people willing to tokenize some assets, let's think they are thinking to real estate or any other type of asset. Basically, should be good to go through which are the main advantages the tokenization process are bringing. So basically, liquidity for sure, it's one of the most important one, or a specific type of liquidity. Can you please jump in and provide answers? So I will not name any.
Well, in terms of, if I may, I mean you have the transaction costs, which are very lower in this type of project. Of course, when you're dealing with let's say real or concrete real estate, transactions cost could be quite high, and also the liquidity for me is not only in terms of tokenizing or liquidifying some assets, but it's also in terms of tradability of these tokens. So maybe you can be a holder of shares, but these shares, if these are not listed companies, it's quite difficult to sell them. So by having tokens rather than shares, and the trading platforms, I'm sure we'll come to that later, but this gives, let's say, a more easy access to tradability of the security that you have in terms of investors.
Thank you.
Sorry, go ahead.
Go ahead, Daniel, no worries.
No, I totally agree with what you said. It's certainly increasing transferability. Of course, depending on the type of assets, certain assets need to follow a specific track. And if those tracks involve, the typical actor of the ecosystem, and those actors are not capable of dealing with digital assets, then they either use third-party solution or have outstanding process to manage those. So the cost will not necessarily decrease at that time. I think everybody agree that using a distributed ledger infrastructure, the one that you don't have to support the cost, that you don't have to maintain, will certainly reduce the cost of issuance. There's no doubt about that. The industry just need to move towards that direction and accept that this is a suitable infrastructure for doing that. So we all agree that it will reduce costs. And they've been a numbers of POC that they've demonstrated that, but we are still, there to see what amount of benefit will that bring in terms of percentage. I think that until we reach some type of critical mass, it will be really difficult to assess. Now, with regards to liquidity, I totally agree that the end game is liquidity, but obviously this is a chimera now to believe that there is liquidity for those tokens. First, because there are very limited tokens. So before having liquidity, you need to have tokens, and you need to have critical mass of tokens that will bring investors. So we all agree that the end game is liquidity, but we need to build the tokens, we need to build infrastructure, and we need to bring investors. So it will take a bit of time, but obviously this is the goal that we are all trying to achieve.
Yeah, I think one of the lesser appreciated advantages of tokenization of assets, which is something that came out as an obvious thing for us in the gold space, was the potential for instant settlement. There are many contracts in the gold space, as well as in most financial assets, that take days on end to settle. Obviously, this can be cleared out instantly with tokenized assets, potentially. Of course, it depends on legislation. And then we're also talking about the transparency component. I think it's quite empowering to be able to show a user in an interface directly whatever is happening in the background, and whatever takes part in the settlement of transaction of any asset that he might be trading now that it's tokenized, and be that the rent that he's paying or he's being paid as a landlord, up until certain data that he owns and is being transacted for a marketing agency.
Yeah, at CryptoCoin Pro, we've seen a huge interest, especially from real estate developers from all around the world, to tokenize their assets. I mean, we went further. We signed letter of intent with pretty large real estate developers. I mean, companies that have over $1 billion in previous projects. So pretty large ones. But the questions most of them are having, obviously, most of them are trying to find an alternative to the current banking solutions that they already have. So, okay, to obtain liquidity, to obtain even maybe the like, instead of bank loans and credits and things like this. But one of their biggest question is related to the trading part. How those assets be traded, and which type of investor can access this type of assets? This is a very important thing, because it's clear that at the local level, the regulatory framework is different. So here I will need your inputs, please, on the type of investors jumping in this type of project.
Yeah, well, actually, the type of investor is defined by the type of instrument that you are issuing, and the distribution method you're selecting. If you go for retail distribution, any retail investor can obviously invest, but in that case, you probably either have to fall under the directive exemption and therefore limit the amount you want to raise up to 8 million, or you have to do a full prospectus. Otherwise, you obviously have to restrict the distribution to qualified investors. So that means that they either have to demonstrate they are knowledgeable, or they invest. That's probably the simple way forward, a minimum of 100 to 125,000 euro in Europe, and in the US, they have to demonstrate they are accredited investors. Now, where those tokens will be traded, I think that we have probably to come back to the basic of what we're trying to do. First of all, in most cases, we are not addressing the public market, publicly traded instrument. There are exchanges that are doing that. They're doing that well. And I'm always using this example because I think that people are not aware. If you look at Euronext Group, for instance, across the whole group, they operate in 7 countries. There are only 1,500 companies that are listed, right? And of course, there is liquidity on those markets. Why? Well, because those companies, for being listed, they have to disclose their figures. They have to demonstrate, the profitability or the result, to make that transparent. So you have a way to assess the value of that asset. And because you have a real-time value of that asset, you have market makers that are on those platforms that are willing to buy those assets against what we call a spread, right? So when you go on an exchange, you have the certainty of having liquidity because someone will buy. If you now talk about what we're doing in private instrument, you don't have that certainty, because we don't have transparency on the value of your assets. So you need first to make sure that your counterparty can assess the value of your assets. But I think that those secondary trading platforms main benefit will not be liquidity, because if you have an asset that you hold in your portfolio, you don't necessarily want instant liquidity. For that, you go on an exchange, or you would have from the start bought another asset. But what you want, if you need to sell that asset, is to create discoverability. Because what we are talking about here is me having a chair. I want to sell that chair. And the only way for me to do that is to put it on the sidewalk in front of my house and hope that someone will pass in front of it and buy my chair. That was, of course, before eBay. Now we have eBay, and because there is eBay, there is discoverability, and therefore, I can sell my chair for a better price. So I think short term, what this infrastructure is perfectly suited for is to use those tokens as an intention to sell and create discoverability on your assets. And of course, if you create discoverability on platforms that are globally connected, then you can reach a broad audience and, with the analogy of eBay, sell that share for a better deal and reduce your illiquidity cost. The real pain for investors, it's not the settlement time. I mean, you settle in one day or in a week. If your asset is illiquid, it doesn't matter, right? But the real pain is the liquidity discount that you have to give away when you don't have someone to buy your assets. And this liquidity discount for equity is an average of 30%, and for funds, it's an average of 15%. So this is where the pain point is. So if we can address that short term and find a mechanism for creating platform and discoverability for those assets by creating tokens, then you have a value proposition that is strong for investors and for the market, and you can drive this industry forward.
Another question related to this one: will those type of tokens be traded exclusively via centralized exchanges, or also, for example, via T-Rex protocol, they can be traded as some sort of, I don't know, OTC or DEX type of exchanges in the future, as long as as each party is going through a KYC process before? And this,
of course, we're dealing with financial instruments, so the rules has to be respected. So everybody has to be KYC'd and whitelisted. Otherwise, that simply won't work. Yeah. The T-Rex is an open source protocol that's simply enabled to ensure that the compliance that has been defined at issue will be respected, right? Now, the question of regulated or non-regulated, our view is that if you want to create a global market, you have to deal with non-regulated exchange, so purely OTC markets, right? If you start to deal with regulated, you are creating silos in every market. What you want is, when you issue a token, that token to be available everywhere. A non-regulated OTC platform is basically what we call a bulletin board, and that have, of course, limited functionality versus an exchange. For example, you don't have a place where buyers and investors can meet and agree on the price. That would make you fall under what we call the MTF definition. MTF means multi-trading facilities. In that case, you fall under MiFID and CSDR, and that obviously makes the whole process more complex and more expensive. But the bulletin board obviously is non-regulated. It doesn't mean that the product on the bulletin board, being financial instruments, are not regulated. It's simply the platform that does not have to be regulated. But if you start deploying those type of platforms globally, and those platforms can be connected all together, then you have a global marketplace.
Stefan, I think you were trying to add something. I had the impression that you were trying to add something.
Well, yeah, I completely agree with what Daniel said earlier, and that is, of course, taking a great look at this market from his point of view. And to just follow up on that and provide maybe a different perspective and look at it more towards the future, I'll just take a look at it from a technical standpoint. Because Daniel already went over the current rules and regulations across the world. There's no need to rephrase that. I think if you look at it from a technological standpoint, the point of this technology is something that we also set out with Oris, which was to be able to bring a certain financial asset. If we're talking about the use case of tokenization, to bring a certain financial asset into the hands of a lot of people. And how that happens and how legislation evolves over time is something that Daniel, for instance, covered. But I think we need to take a look at not the technology itself that is going to be used, not the regulation, but how the financial asset that exists in reality, or how the asset that exists in reality can reach its maximum potential of being traded, and what the rules are behind how it's being tokenized. That's one of the most important things in the process of tokenizing an asset. And it's something that I think a lot of companies right now, unfortunately, do not have the luxury to look into, because we have to spend a lot of money on regulation and on expanding into different new markets that each have their own set of rules.
Yeah, what would be very interesting now, it's what type of trends do you see right now? I mean, in the last 6-12 months, in terms of any sort of KPI related to STO part. Do you see a higher number of requests for this type of project? Do you see a lower number, but requests which are more committed to have the things done? What are the trends that you see from your perspective? So maybe Olivier, you can help us.
Yeah. Well, I mean, in terms of trends in STOs. I mean, I've read the PwC report, the recent one. I mean, we've seen that basically the projects that really goes to completion are decreasing, but it's more robust projects. But in terms of number which completes, they are less than past year, for instance. It's really about financial instrument rather than, I don't know, whatever other instrument. You have really, like, for me, two types of trend is really real estate and financial instruments with, let's say, bigger and even public issuers. When you take the bank, public bank, authorized bank, which participate on RV issuing entities. So that really shows the seriousness of the project and the robustness. But it's a decrease in the number, and it's more towards financial instrument as far as I'm concerned.
Okay.
Yeah,
Daniel, you might have a view.
Yeah, I would totally tend to agree with you. I think that the days of STOs being the next wave of ICOs are over, right? Of course, what we do goes beyond blockchain. I think this industry is going into a digitalization phase. So therefore, we will see platform emerging that are bringing this whole process in a digital form. So very much like crowdfunding type of platforms that will use the blockchain as the underlying infrastructure in order to streamline the cost and bring benefit and obviously enable those tokens to reach a broader market for secondary trading. But this is nothing different than the crowdfunding platform that are existing today, other than they're going towards a new infrastructure. In essence, I think that a good project will find funding. A bad project will not find funding. And I think that a lot of people came with bad project, and that's why we saw the number decreasing. While at the other side, the financial institutions started to appreciate the value of working on a joint infrastructure, which was totally new for them. Obviously, you have to think that banks have been building silos that were super secure to guarantee, that they wouldn't be hacked. And now we're asking them to use infrastructure that are all talking to each other because it is more cost efficient. So it takes a bit of time for them to go there and experiment it and identify the cost benefit. But of course, being very much involved in project with financial institutions, there's absolutely no doubt that next year we will see a numbers of large financial institutions coming with project. They've been doing POC, internal POC, external POC, some announcement. What we know for sure is that a lot of them are migrating towards this technology. So there are still building blocks that are missing. They're working on that. Now everybody's talking about custody, for example. We know as a fact that there are technical solutions that are now in place and are being assessed by those financial institutions. I think they've been trying to do their homework internally, but at the end of the day, it's rather complex. They are better relying on third-party solutions. So we see a trend towards that. When the custody part will be covered, they will be in the capacity to guarantee that the whole value chain that they are supposed to commit to in their role of either transfer agent, at least trusted party will be ensured. Then we'll see more and more projects. So totally agree with you that financial instrument, the financial institution are really taking the lead on that. And I'm pretty sure that we will see a numbers of projects going on next year and more instrument being representing on the blockchain.
I agree as well.
Yeah. And now as a last question, because we have only 1 or 2 minutes left in this direction, if someone is willing to start an STO, which are the steps do you see they need to follow, the initial steps? Because it's clear that here are several different challenges. Technical challenges, compliance part, the awareness and marketing part of the product, and which are the steps that you think should be the best ones to follow in order to get started with such a product? If
I may jump in really quickly here, one of the things that I think we got right at Oris, as opposed to a lot of other gold-backed cryptocurrencies that were out there, was from the very beginning, we took a look at the long-term sustainability, the intrinsic sustainability or economic sustainability of the ecosystem that we're building. And the ecosystem that we're building was an ecosystem that handles the tokenization of gold, as well as the transacting of gold and the holding of gold over time, as well as the withdrawal of gold and getting it out of the system. This was something that had to be thought of to perfection so that there were no flaws or potential economic exploits that would alter the matching between gold as an asset and the token that we built on top of it. anything that is inherently unstable in the process of tokenizing an asset will decouple the value of your token from the asset itself, and that's a dangerous component. That's the most important tip I have to add here.
Thank you.
Well, from my side, I would say come and talk to us, because we will help you providing all the tools and solution to tokenize your assets. But obviously, you know, as any project, you need to be properly advised. So you need to have a law firm advising you on what type of instruments, how to structure it, where to distribute it. You need to think about, you know, what you want to tokenize. What are the economics behind? Do you tokenize equity? Do you tokenize the beneficial interest of your company? Do you tokenize a debt? What are you trying to achieve, right? But to conclude, I would say that I think the big wave that's going to happen short term is not necessarily about primary issuance, but about bringing existing assets that are highly valuable on the blockchain. And for doing that, there is absolutely no barrier for you doing it if you consider that the token is just a digital representation of an existing registry. Tomorrow, you can bring, tomorrow, Saturday, you can bring those assets on the blockchain and create a digital representation that then you can use for creating secondary market activities. And that can happen now. You don't have to wait 6 months. This is addressing compliance. This is addressing technology risk. So you evolve in a business that is totally neutral from those risk perceptions.
Thank you. So as an exercise for asset tokenization, we are running right now in Premiere at the global level the first tokenized event, obviously using Tokeny technology behind of it. So basically this concept, the whole concept, virtual blockchain summit, which is owned by a UK company, and the trademark, it's registered also on the UK company, it's getting tokenized, and all the tokens which have the ownership proof on them basically will be shared between all of us. This is a surprise for most panelists and speakers to this event. So basically the whole concept of virtual blockchain summit will be owned in a short period of time by all of us by using Tokeny technology. So we'll interact and we'll have a very interesting experience of how this type of things can be done. So please follow it, because we'll follow up via email, obviously, with all the necessary details. Okay. Thank you, guys. Thank you for participating. It was really nice to have you today here. So looking forward to have you also on the next virtual blockchain summits. All the best there. Have a good day.
Thank you very much for having us.
Ciao.
Take care.
Thank you. Have a good day. Bye-bye.
Bye.